Hey, good afternoon, everyone. It's about 2 o'clock here. This is going to be a real short video because there's not a whole lot of new developments here technically from what we looked at the end of the day Friday. This is new crop soybeans. Here's your big day on the report, right? We had the big outside day down. And on Friday, we thought, well, this is a bearish day, but in the bigger context, it really doesn't mean a whole lot because it didn't take out any major support or resistance, and it just kind of was a big volatile a day of nothing. And now today we have another day of probably little significance. So it's an inside day to Friday. We did close above where we opened Friday, which is significant because that is above where the report came out. And we were able to close back up above this 15, 13, 20 area that represents several lows right in here. So we are kind of at the top end of that range. And if you notice back here to the April highs, we're near the top end of those ranges as well. So today's probably a day where the bulls got a little bit of hope and the bears probably got a little bit of confidence because we didn't do anything to damage the bear case, and we didn't do anything to hurt the bull case either. So so here we are. We're looking for beans to work higher. The balance sheet's just too tight in our opinion, and the South American crop is well known at this point. You saw China step in today and buy 400,000 tons of soybeans. That's about 12 million bushels or so, or right in that territory. And so no, sorry, that's not 12 million bushels. 32 million is yeah, it is. It's 12 million bushels. Sorry. Okay, so roughly 12 million bushels were bought, not insignificant. We're looking at this gap area right up here as a target, somewhere between this 1376 and 1379. You can see that's also the 61.8 retracement level from the peak down. Important levels to think about are yesterday's high, which is right around the 38.2, and then the 50% mark is 1359. Both of those are significant. If we can get up to those, we should be able to challenge the gap. Now, how we get there is really important as to whether or not we think we may be able to find higher prices. Certainly, if you look at beans from just a 50,000 foot view and say, hey, is our balance sheet tight enough to push us back higher? The answer is yeah, maybe. Is our supply going to be so big that we have to push this thing lower? And that's probably less likely than it being too tight. So we're a little bit more bullish than bearish here. Obviously, the chart setup is set to where it can go either way, but we're looking for a retracement level a little bit higher before we want to do anything more aggressive than just sit and wait. Okay, so let's talk about corn. Corn started off a little bit lower today, traded and tested this low right back here, right at 481. It did hold. It left a little bit of a lower shadow. It was unable to reclaim a full reversal today. About 112, it was trading up 2 cents, so it was posting a hook reversal. They took that away at the end, so that's not good. Kind of like soybeans. The bulls didn't really get anything to eat, but they also have a little bit of hope here with the lower shadow and the double bottom. The bears probably don't have anything that they're real concerned about because they have a lower low and a lower high and are trading at the bottom end of this range. So really we just need more time, more trade to see how we're analyzed. But for today, if you thought we were going to come in and gap lower, you did not get what you wanted. And so at this point, you have to be pretty worried about a move higher. I think a move back above 496 and clearly a close back up above 5 would move things to the bullish case, but we'll have to see if we can get that or not. And if we do work higher, then we're looking at the 38.2 retracement of the full move lower at 515. And oh, sorry, here, let me move this and redo that. Let's go from here down. So we're looking at 516 for the 38.2 and 537 for the 61.8, which would also be the bottom of the daily cloud, and would be back up into the gap levels here that are left unfilled. So that's not out of the question. We just don't know what the catalyst would be to push it up to there. Short covering is also a catalyst that could do it as well. if traders aren't satisfied that we can't violate this low right here. So we'll continue to let it trade. Obviously, a move under here would put in a round of selling, but I don't want to get too aggressive with that because the balance sheet's not that tight. In fact, the FSA today came out and released its acreage number, which is about 1 million acres less than what the USDA has been trading with, or what the USDA has been posting. And if that is true, then we're looking at a carryout closer to 1.4 billion as opposed to 2.2 billion. So the downside of this market is probably pretty limited here until we get further along and understand exactly what our yield is and what the demand picture starts to end up looking like. In fact, if you look at wheat, this is a good example of why we don't want to get too bearish too early. You know, see this long lower shadow here on wheat. You know, wheat it closed off 8.5. It was down 22 or 3 at one point today, really challenging, pressing these lows, but then couldn't really break it. So it ends up leaving this long lower shadow. And now what this is set up for here is a move back above today's high at 771. It could become really explosive because the bears keep pressing the short side, but once they run out of juice and they can't push it lower, then a lot of times that'll induce a short covering rally, and we can bring it right back up. But no indication of a low here yet, other than this shadow. Corn was really pretty good. Beans pretty good. Wheat, you know, sure looked like it was going to be a lot worse. So we'll just have to wait and see what happens there. I'd be really, really patient with all these markets. You know, supply has been known now for a while, and demand is just steady. You know, it's not really getting worse. It's just steady. So I'd keep an eye on the dollar, keep an eye on oil, keep an eye on equities and what's going on in all the other markets, because the money flow that changes hands between all those markets could be supportive to commodities, especially if the dollar were to turn around and start back lower, or if oil starts to move higher. And oil moving higher in the face of a stronger dollar could also be a super bullish catalyst to commodities in general and the grain specifically. So a lot left to digest and look at, and we'll just have to continue watching and see what happens. But for today, not a whole lot of new stuff to talk about. So remember, there's always risk when you're trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a great night. We'll be back with you either tomorrow or Wednesday, depending on action, and we'll talk to you later. Thanks. Bye.